Welcome back to the Cryptowrld channel, everyone. My name is Josh, and right now, Bitcoin is currently running into important resistance in the short term and currently bouncing between support and resistance, as we've just seen one of the worst days in history for the US stock market, as the market is entering into bear market territory, and we are seeing hedge funds sell record amounts of stock that we have not seen since the global financial crisis. So I'll be talking about that in just a moment and why it might get even worse very soon, while the price of Ethereum is technically still forming this bullish divergence, while the price of XRP is still repeating history in the short term. So I'll be talking about all of that and more later in the video, so definitely watch to the end. First of all, just before we take a look at the Bitcoin and crypto charts today, we need to talk about the US stock market and what's happening with the financial news today, because we just saw a historically bad day. This is not hyperbole. We actually saw the worst day ever for the NASDAQ 100 index in terms of a point drop. Not necessarily a percentage drop, but the worst ever single day point loss for the NASDAQ 100 index in history. And so as we can see here, the NASDAQ 100 index, which is not a small stock or small index or anything like that, it's one of the largest indices in the world. And the NASDAQ 100 index in just a single trading day lost over 1,000 points straight towards the downside and came within just 1.5% from triggering a circuit breaker, which, in case you're new to all of this, that's basically when the stock market basically halts because it's gone too far to the downside and it's so violent towards the downside that they have to just cut trading to basically take a break. And so that is the current situation right now in the stock market. This chart right here is the S&P 500 index on the daily time frame, and the last 2 days in particular have been some of the worst days in recent history. And if we're looking at who is selling all of these stocks right here, well, one of the largest groups of sellers at the moment is the hedge funds over on Wall Street, because the hedge funds just over the last couple of days sold the largest amount of stocks that they've ever sold on net. We're talking about net selling here in a single trading day since 2010. We're talking about the global financial crisis, which obviously occurred between around 2008 to 2011, give or take. And what's very interesting is while the big hedge funds on Wall Street are selling stock the fastest they can, they're really trying to get out of the market right now, retail investors, the small traders out there, the people like you and me, are actually buying the dip on the stock market right now, which makes me think the drop might get even worse, because obviously the hedge funds out there are dealing with large amounts of money. They have the top information in the market, basically pointing towards more downside. They're trying to get out of the market at the fastest pace since the global financial crisis. Once again, while retail investors, the people with really not as much information compared to some of the top people on Wall Street, are basically trying to buy stocks at the moment during this collapse. And on top of that, if we're measuring from this high to low, the S&P 500 index is almost officially about to enter into bear market territory, because in case you're new to all of this, the official definition of a bear market for the stock market at least is down 20% from high to low. And now obviously for crypto that doesn't work as well, considering crypto is much more volatile, but right now the S&P 500 index is down around 17.5% as recording this video, so it's almost officially in bear market territory. But the NASDAQ 100 index is already now entering into bear market territory, because if we're measuring from the high to low for the NASDAQ 100 index, at least as of recording this video, once again, it is down over 21%, and that's only in around 1 month. That's a very large drop for a major index. And obviously, I already warned about all of this happening weeks ago now on the channel, when this bear market signal confirmed weeks ago before we entered bear market territory just over the last 1 to 2 days. So obviously, if you've been watching my channel for weeks, you would have already seen all of this bearish price action coming before it happened. And so what do I expect right now for the stock market and for crypto by extension? Well, essentially, this signal is telling us we're likely going to continue a bear market for some time here in the stock market. The last time we saw this signal confirm, basically we saw approximately a 1-year bear market. It confirmed around January 2022, and basically we ended the bear market pretty much at the end of 2022. So the entire 2022 right here, we saw a bear market for the stock market. And in case you're new to all of this, once again, the stock market and the crypto market are highly correlated. Now, it's not a perfect correlation. So obviously there's some times where the stock market might go down and crypto might go up, or there's other times where crypto might go down and stocks might go up. But most of the time they tend to move in the same direction when we're talking about the larger moves in particular. And so, for example, during 2022, while the stock market was in a bear market, crypto was also in a bear market during 2022. And then as stocks began to recover entering into 2023, and especially during 2024, having a very solid year, crypto also had a very solid year over around 2023 to 2024. And so that's why I'm covering the stock market here on this crypto channel, because it is definitely worth pointing out when we're seeing a historically bad day in the US stock market, which could likely translate over to potentially bearish price action for the crypto market to come. And now it is worth pointing out that one of the fundamental differences between this time and of course 2022 is the actual cause for the bearish price action. So of course last time back here, it was the spike in inflation and the subsequent reaction by the Federal Reserve having to hike interest rates, which was very bearish for markets. And basically for a long time here, for once again around a year, there was really no escape from the Federal Reserve raising interest rates. Basically, for as long as inflation was high, they had to raise interest rates, which basically kept the market down for a longer period of time. Whereas this time around, of course, one of the major fundamental causes for all of this bearish price action here is, of course, the tariffs happening out of the United States and basically the subsequent trade war happening. But obviously that can actually reverse potentially a lot faster than, say, inflation in interest rates. So obviously inflation and interest rates, they take a lot longer to reverse, whereas a simple decision can be made to drop tariffs, and that could potentially reverse the fundamental factor that is causing this right here. And so it's just important to point that out. Once again, this could possibly reverse really at any point that the US decides to basically drop tariffs. But with that being said, if we're taking a look at the Bitcoin charts today on the 4-day time frame, and right now we're still seeing the red indicator in the super trend indicator. So not much has changed on this chart over the last one day. And if we're taking a look at this weekly time frame, at least for now, the MACD on the weekly chart is still looking more bearish than it is bullish, but we're not necessarily seeing as much bearish momentum compared to a few weeks ago. And so once again, not much has changed over the last one day on this Bitcoin chart. And if we're taking a look at this weekly Bitcoin chart, obviously we're still seeing a significant bearish divergence play out here on the weekly time frame, as I've been saying since almost the all-time high at the beginning of this year. I've been talking about this bearish divergence. And so once again, as I've been saying since much higher prices, do not expect any significant bullish momentum anytime soon, because basically this means we're running out of bullish momentum and we're likely going to see either a larger pullback or potentially some choppy sideways price action as the most common outcomes from a bearish divergence, the exact opposite to a bullish divergence. But of course, we can see some short-term bullish price action here and there on smaller time frames, like bounces from support and things like that on smaller time frames. Just don't necessarily expect significant bullish momentum towards the upside anytime soon. And once again, I've been saying that for months since almost the all-time high. And just before taking a look at some other important Bitcoin and crypto charts today, first, if you want to trade any of these moves in the price of Bitcoin or any other crypto, even if they're bearish, you can use things like short positions, for example, to profit along the way towards the downside. And personally, I'm taking a lot of my crypto trades over on BTNex, so I'll make sure to leave a link to BTNex below this video in the description and in the pinned comment. And if you use that link, it'll take you to this page right here where you can claim some massive trading bonuses that you can only claim using that link. Like for example, up to a 23,000 USDT bonus that can get deposited onto your BTNex account by BTNex as an extra bonus onto your account, simply just by trading crypto using that link. So if you're going to be trading crypto anyway, you might as well check this out. Once again, first link below this video. And in case you're wondering, BTNex is a no KYC exchange, which means you can access it from basically any country in the world without needing any KYC. be. But as always, check your local regulations when it comes to trading crypto. And for whatever reason, if you don't want BTNX as an exchange, there's also 2bit as another option out there, another exchange that I also trade on. So I'll also make sure to leave a link to 2bit below this video as well. And if you use that link to 2bit, you can also claim some massive trading bonuses over here. And in case you're wondering, 2bit is also a no KYC exchange as well. But with that being said, taking a look at this daily Bitcoin chart, and right now the price is just reclaiming this Fibonacci level, which should now act as a bit of support, sitting at around 83.3k. But obviously most of the support in the short term is sitting at closer towards around 82,000, and I'll talk about short-term support levels in just a moment. But for now, when it comes to significant resistance to watch out for, we still have a lot of resistance at around 88,000. But if we can finally see a breakout at some point confirm with candle closes above 88,000, in that situation, the next level of resistance I'll be watching is sitting at around 91,500 to 92,000, and above that, I'll be watching around 96,000 based on this golden pocket area of resistance, and also a lot of resistance here based on traded volume in the volume profile indicator at 96,000. But remember, before we can look at these slightly higher prices, we still have a lot of resistance in between around 86 to 88,000, mainly at 88,000, as I've been warning about since all of these latest rejections. And like I just said, we do have some short-term support, which I'll talk about in just a moment, but the next significant area of support towards the downside, at least here on this 3-day time frame, is sitting in between around 70,000 to 74,000. And if we're taking a look at this daily time frame, we still have this descending line of resistance to watch out for, which is currently sitting at just underneath 86,000, close towards around 85.7k. And with that being said, zooming into the shorter term, taking a look at the 3-hour time frame, and at least as of right now, the price of Bitcoin is basically just chopping around sideways in a bit of a sideways price range between support and resistance, at least for now, just in the short term once again. And the support to watch out for is mainly at around 81,500, and below that we have more short-term supports at 80,000, and below that more support at around 78.5k. And we could also find a small amount of support based on this previous line of resistance, which is sitting at around 83.5k. And in terms of short-term resistance, we could now find a bit of short-term resistance at around 84.5k, as we've seen previously. But if we soon see a breakout above 84.5k, in that situation, simply focus on this descending line of resistance, once again at roughly around 85.7k, give or take. And then above that, we have significant resistance in between 86 to 88,000, mainly at that 88k level. And so obviously, we still have a lot of resistance in the short term to pay attention to, and also a decent amount of support here in the short term. And it is actually somewhat surprising how well crypto, at least for now, just in the short term once again, is actually holding up in the face of a massive drop in the US stock market. And now obviously around a day or two ago, we did end up seeing a drop in the price of Bitcoin right here, which coincided with that drop in the stock market. But since the further drop in the stock market over the last one day, we actually saw a bit of a bounce in the crypto market, which is pleasantly surprising to say the least. But a lot of people out there right now are talking about the decoupling between the crypto market and the stock market, with crypto obviously experiencing a bit of a short-term bounce at the same time as the stock market having a massive straight line move towards the downside. But in my experience over many years in the crypto market, we've seen many times like this where we have a slight short-term decoupling, basically a period where they're not as correlated. Once again, as I've been saying for years now on the channel, it's not a perfect 100% correlation, but they are still highly correlated. So at least in my opinion, and this is backed up by crypto's entire price history, it is quite likely that at some point they will basically get back on track. And so in other words, we'll have to see a bounce very soon here in the stock market. Or if the stock market continues like this, it is very likely that soon enough, this will flow over to the crypto market. And once again, this is really based on crypto's entire price history. Pretty much throughout all of history for crypto, it has been very correlated, not a perfect correlation, but very correlated to the stock market, especially when we're talking about the larger moves like the bull markets and the bear markets. But with that being said, taking a quick look at the Bitcoin liquidation heat map, and right now we do have some short-term liquidity just below the price at close to 81,000, and we still have a lot of liquidity towards the upside at around 89,000 as well. But as always, we cannot ignore other points of support and resistance where the price would likely struggle at. And with that being said, taking a look at Ethereum on the weekly time frame, and right now Ethereum is technically still within a larger bear market, as I've been saying for a long time now on the channel. So on the weekly chart, not much has changed right now. And if we're taking a look at the 3-day time frame, obviously we are currently trading below this important Fibonacci level of support, which is also not really a good sign to see, at least on this chart right here. But if we're taking a look at the daily time frame, just in the somewhat shorter term, we now have a new bullish divergence to pay attention to, which basically has just been extending over the last few days with another lower low in the price in the candle closes and continued higher lows in the daily Ethereum RSI. And so if we see a little bit more confirmation here with, let's just say, this green candle confirming, or even better, if we see another green candle, basically once we see a little bit more of a bounce in the RSI, which is confirmed by some green candle closes on the daily time frame, then after that, we can expect potentially a little bit of a short-term break or a relief from all of the bearish price action. Once again, not necessarily a massive bullish trend reversal, not necessarily a massive straight line move towards the upside or high momentum towards the upside, just most likely a slight bullish relief or a bit of choppy sideways price action in the coming days or weeks. Just talking about the somewhat shorter term, but not necessarily changing the larger trend. And so that is still the situation for Ethereum. And with that being said, if we're taking a look at the price of Solana on the weekly time frame over the last one day, obviously the price of Solana is now trading back inside this area of support in between 120 to 130. And so obviously for now, and like I've said recently here on the channel, we've not actually confirmed a break below this area of support, which means at least for now, we are still finding a lot of support in this area, as I've been saying for almost a month. In fact, over a month now, we've been finding a lot of support from within this area. But if we see a weekly candle close actually confirm below 120, not just a candle week towards the downside, but a weekly candle close confirming below 120, in that situation, that would confirm the break below this support. And the next major price target towards the downside would be sitting at around $90 per Solana. And in case you're wondering, the next weekly candle close confirms in a little over 2 days from now at exactly midnight UTC on Sunday night or Monday morning. And at least for now, once again, the price is still running into this support. So not much has changed over the last 1 day for Solana, or over the last month really. So with that being said, getting straight into the price of XRP on the 3-day time frame. And right now, technically speaking, this massive bearish divergence is still active for the price of XRP, at least on this chart right here, telling us to not expect significant bullish momentum anytime soon. And once again, I've been saying that since much higher prices months ago. And if we're taking a look at this 8-hour time frame, looking at the shorter term, technically speaking, the price of XRP is still potentially repeating history. Obviously, as I explained recently here on the channel, we potentially just reconfirmed, extended this short-term bullish divergence with a new lower low in the price in the candle closes and a new higher low in the 8-hour XRP RSI. And so this is still technically telling us that we're most likely going to see just a slight bullish relief, or maybe a bit of choppy sideways price action within this area in the coming days, maybe over the next week. Once again, just a somewhat shorter term. And this area of support to watch out for, which we perfectly bounced from over the last couple of days, is sitting in between $1.95 to $2.05. And the next major resistance to watch out for is in between around $2.24 to $2.30. And if we can finally see a breakout back above that area, the next resistance is at around 248 approximately, and above that, more resistance at 256, and also in between 265 to 280. But remember, based on the larger time frames here, don't necessarily expect massive high momentum towards the upside anytime soon, like what we saw near the end of 2024, for example. But at least in the shorter term, yes, we're most likely going to see just a slight relief here in the short term, as I've already been saying in recent videos here on the channel, and it's already now starting to play out exactly as expected. And with that being said, taking a look at the price of Chainlink on the daily time frame, and right now Chainlink is still perfectly finding support at this 78.6% Fibonacci level of support, which is sitting at around $12.70 to $12.80 approximately. And based on the daily candle closes, we're basically trading right on that level of support. We're just holding that level of support, at least as of right now. But if we were to see daily candle closes actually confirm below around 1270, and especially if we flip that into new resistance and reject from that level like that, for example, then in that situation, the next major price target, the next significant level of support towards the downside would be sitting at around $10 per Chainlink. But obviously for now, we are still finding support in that high $12 area, just underneath $13. And as for resistance to watch out for, we have significant resistance in between 1490 to 1550. And we could also find a small amount of short-term resistance at approximately 1420 to 1430, give or take. And obviously in terms of the larger trend, as I've been saying for months now on the channel, since much higher prices, we're still in a larger bearish trend for the price of Chainlink. But in the somewhat shorter term here, it is possible we could form a little bit of a sideways price range between support and resistance during the larger bearish trend, kind of like what we saw just here for a short period of time, or back here, for example. But with that being said, if you want to trade any of these moves in the price of any crypto, once again, check those links below this video to those exchanges if you want to claim those massive bonuses that are only available using those links. And if you want to actually know how you can profit from crypto, no matter what the price is doing, whether the price is bullish, bearish, or chopping around sideways, you can profit from all of that price action by watching these videos popping up right here on your screen. The video in the top left shows you how you can profit from bullish or bearish price action using long positions or short positions, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.